Welcome to this webinar. We have our training update each and every Thursday at 10 a.m. So please feel free to jump onto lightyeardocs.com.au and join us for an analysis of relevant documentation. But I thought this was a great opportunity to get in and look at the key ones that should be up and running this time of year. One is the pensions and also investment strategy requirements and documentation. So let's just move on and go to the first slide. It's quite interesting. Now, this was not a Dorothy Dixer. I didn't mean to do this. It was certainly no collusion between myself and our SMSF auditor here. But it was a story that you can see down below there that popped up on the 18th of July, 8th of July, sorry, and talking about the ATO closely monitoring the payment of minimum pension amounts, valuations of the documentation for pension commencements and commutations, warns an SMSF auditor. In fact, on the LightYear docs, we had a great number of pull downs of our promissory notes leading up to 30 June, where people had not made the minimum pension payments, didn't have the cash on hand, and were using the promissory note, which was issued by the SMSF to the member to cover the pension payment, given that a promissory note or a cheque effectively is deemed to be cash for the Commissioner when you have a look at the Commissioner's contributions ruling. And importantly, on that one, not many of us have cheques anymore. So promissory notes are as good as cheques and certainly available up on the LightYear Docs site. So what we're going to do today, if we just go to the next slide, thanks, Ash. And what I want to do is just focus in on the two key components, one being the funds investment strategy, and then we're going to look at the pension documentation. So I'm going to go through the legal side and why it's important, the ups and downs of not having an investment strategy, and more importantly, the same with the pensions. And then what we'll do is we'll then go in and actually build the documents. So the first one is the investment strategy. This comes from the Commissioner's ruling. You can look at NAT 2063. So do a Google search on that and that'll be crucial. But the relevant section in the SIS Act provides that the trustees, and this is an excerpt from NAT 2063, the trustees of SMSF are solely responsible, directly accountable for the prudential management of their members' benefits. I think we all know that one. They can use an advisor, but in the end, it is their responsibility. Although we'll talk about in a second the downsides for advisors, and in particular auditors and administrators for using an incorrect investment strategy. As part of this prudential responsibility, I think this is crucial to understand, the trustees at SMSF are required to prepare and implement an investment strategy for the superannuation fund. Now, in the session I did yesterday, it's important to understand that investment strategy is a forward-looking document. To prepare an investment strategy after year-end, trying to encapsulate the actual benchmarks and the figures after year-end is not an investment strategy. It's an historical document on the underlying investments and objectives of what has passed effectively in the last income year. So ideally, we need to put in place an investment strategy each and every year. Now, it may well be that we haven't changed our investment strategy for the last 2 or 3 years, so we can simply roll it over. But again, from a prudential point of view and having a look at where we just came from with that SMSF auditor, we cannot rely on the facts that our trustee is going to go ahead and effectively achieve the investment strategy. If we are involved in the administration of the fund, if we're involved in the auditing of the fund or the advising of the fund, we need to get up and running in relation to investment strategy. From a Corporations Act point of view, as an administrator or an auditor, we can effectively just review and help the client make the investment strategy. Anyone who's got a limited license, because it's generic information or general information, under a limited license, you have got full authority to create an investment strategy. Importantly, an investment strategy, I'm going to say this, is not a financial product. So once again, if you're advising a trustee of a fund, an investment strategy is not a financial product. It is only when you go down and start to pile up that investment strategy with the underlying investments. For example, if we've got shares and looking at franking credits to ameliorate our contributions tax coming up very shortly, then effectively what we would do from that perspective is that's when we go into being a financial product. But essentially, again, I reiterate, investment strategy is not a financial product, which is good and bad. It means that it's incumbent upon all of us to look at what is and is not an investment strategy. Again, it's a forward-looking document. The strategy must reflect the purpose and circumstances of the fund and have particular regard to the membership profile, benefit structure, tax position, and liquidity requirements of the fund. For those of you who weren't on the session yesterday, we're launching next Tuesday on the 16th of July, my top 7 SMSF strategies for 2019-2020. Inside those ones, we'll be talking about, obviously, the 6-member fund, the family fund, or what we like to use, one to protect the bloodline, etc., is called a leading member SMSF, which is available on LightYear Docs. So make sure that you sign up for that. Unfortunately, we're very limited in the numbers. We can only have 500 on the platform. We've already got 150 on that session already. But when we come down to it, the investment strategy can be for the whole fund. But as this requirement from the Commissioner NAT 2063 talks about, is that we have to look at all the circumstances. Now, if we're bringing younger members in the fund, which is certainly a great idea when it comes around to succession planning, so Roy Benson, to all panelists, just confirming you said investment strategy is not a financial product. Correct. A financial product deals with a superannuation interest in an SMSF. Because it's consumption or consumer, and we're looking at the Corporations Act, effectively, when we do an underlying investment strategy inside the fund, that is not impacting the members' benefits, which are essentially taking the pension. Now, when I talk about pensions a little bit later on, that is a financial product. Commencing a pension, ceasing a pension, that is a financial product. But the underlying investment strategy is not a financial product, which is important for those of you, and I think, Roy, I'm well aware that you are obviously licensed, that we do not need to prepare an SOA around an investment strategy. So let's go on further. Investment strategies can be for the whole fund, but if we're bringing in younger members of the fund, they're going to have completely different risk and investment profiles than the older members of the fund. So if we've got a 70-year-old, they may be primarily investing in cash, gold, or whatever the investments are. And Michael Jeffriess, from who's our CFO, is going to be taking us through the investment strategy document very shortly and dealing with all the various classes that you can put in there. But in essence, what we've got there is that we may have separate investment strategies for within the fund. So we might have one for a specific younger member who might want to have an LRBA, as opposed to having one for an older member. And we may, in fact, have a couple of pensions running. So there might be one tax-free pension if we've set things up right, and one taxable pension, so taxable component, with the tax-free going down to our adult children, the taxable one to our spouse and financial dependents. Importantly, from that perspective, it makes sense to actually have separate investment strategies rather than correlating and aggregating just one. So with an investment strategy, we can build sub-funds, and I'll be talking about this next week, where we do have separate investment strategies per superannuation interest, like per pension, per accumulation, or we can have just one for the accumulation fund and also one for the pension side. Now, from a tax perspective, remember, we aggregate everything anyway if we can't get the segregated assets. We're talking about separate investment strategies under the SIS Act. So that's separate investment strategies under the SIS Act. Breaches in the investment strategy requirement may result in the trustees being fined or sued for loss or damages. So if we have a look at section 55(1) of the SIS Act, if there's a breach of any of the governing rules of the fund and the investment strategies are actually brought into the governing rules of the fund, if it's not specifically included in the governing deed that the trustee of the fund must do an investment strategy, then effectively it's brought in under the SIS Act. And it's one of the only times that a provision under the SIS Act is brought into account inside the deed. So if we breach that, section 55(1) means that any person who breaches, so we're talking about the trustee here obviously, but it includes an accountant, administrator, auditor, financial planner, anywhere along that line, if effectively you put in place a document that is supposed to be investment strategy and is not deemed to be an investment strategy because it's either backward looking, or alternatively, when we go through the next page, if it simply goes 0 to 100% equity, 0 to 100% cash, 0 to 100% fixed interest, that is not an investment strategy because there's no strategic guidelines. You'll see that on the next page. Importantly, and this is the real crucial, is Section 55(3) of the SIS Act enables members of the fund, and I think this is crucial, enables members of the fund to recover against the trustee and against anyone else who's been involved in that investment strategy. So we can see that with the auditors when we have a look at the case of Cam and Bear. If we go and have a look at all of those particular issues, the members can actually recover directly from the auditors, administrators, accountants or financial planners, anyone who's been involved in this whole process. So my view is you're either in and you help them do the investment strategy or you disclaim. Again, one of my key mottos for 2019, 2020, disclaim, disclaim, disclaim. Make sure that your client signs a disclaimer that you are not involved in an investment strategy. Make sure they sign a disclaimer when you tell them to upgrade their deed and they don't upgrade their deed, so they miss out on strategies or it has some limitations, that you disclaim that they didn't want to update their deed, rather than just simply having a notice for it. So importantly, anyone can be sued for loss or damages. In addition, the fund can lose its complying status. As I said before, these are the documentation that we have to look at. There's a $4,200 fine, pension documentation. These are the things that we need to do now. We can't ride our horse backwards. Another one, employment agreements, ideally to be done now, but that's not the subject of this discussion. We then go to the next slide, thanks. So what are the, okay, so let's just go from that. And there should be another slide there, Ash, around investment strategies. If we, there we go. Up the next one up above that. Okay, so we just missed this one. So we did that one. Next slide we went down. Sorry, I jumped through that one. So if you just go through that, it's fine. So investment strategy, if I start up the top, so you can jump up onto the top now. Investment strategy set out the investment objectives of the fund. Now, one of the problems we've got, and certainly I've seen when we have a look at a large retail industry fund, generally they'll have as an investment objective that the objective is to achieve a 2 or 3% return above CPI, which is dangerous because if you don't achieve that, then someone obviously potentially can sue the trustee of the fund. You'll see when we get into our investment strategy on LightYear Docs, what I've done is I've just simply said the investment objective is to maximise the members' retirement incomes, which is clearly the case. Even if you're in a pension stage and we're doing a specific investment strategy for that pension stage, again, we've got exactly the same philosophy, is it is there to essentially be a maximisation of the members' retirement income. So what I'll be doing is that's our investment objective. Now, then we need to say, and this comes out of, again, the Commissioner's ruling, detail the investment methods the trustees will adopt to achieve those objectives, which we'll have a look at very shortly. It is the trustee's duty to make, implement and document decisions about investing fund assets to carefully monitor the performance of those assets. The trustees must ensure all investment decisions are made in accordance with the investment strategy. Again, if they make an investment decision outside the investment strategy, then effectively what we've got is we're back in Section 55(1), 55(3). Anyone involved in that process can effectively be sued for loss or damages. And this is strict liability. It's not negligence. So we're not even looking at Cam and Bear and the tortious actions of negligence. We're actually inside the SIS Act. So it's a direct access to recoup any losses. Breaches, as we said, we went through that, can be sued for loss of damages. So let's just go out and have a look into the LightYear Docs site. Thanks, Ash. So for those of you who have not registered on there, please make sure that you register on the LightYear Docs site. And if you're not using it, it's just a couple of things. You'll see up there, we've got a search engine, but just to let you know, we're just releasing our new pricing strategy today. So the first one is all of our documents are actually a maximum of $99. Now, the ones we're looking at today, investment strategies and also pension payments are only $49. For some of you who do quite a few documents a month, and it may be SMSF, it may be discretionary trust companies, bucket companies, loan agreements, Div 7A loan agreements, we've got the whole box and dice sitting inside over the LightYear Docs platform, then you might be better off using our $5.95 a month, which is our LY firm. So that's unlimited documentation. What we find, though, is generally most people will go down the track of getting firm-wide CPD, so it's under FASEA hours. So that way you get the unlimited docs, you get technical support and strategy support from myself, plus also unlimited FASEA CPD hours for unlimited members of your firm. So have a look at that. If you're not signed up, if you'd like to have a chat, just contact us support@lightyeardocs.com.au. So if we just go down, we have a look at the investment strategy now. As I said, the cost on that is $49. If you've got a number of clients to go through for this, then it seems to me to make absolute sense to be on the LightYear Docs, either the LY Strategist or just the LightYear Docs Firm LY Firm. Particularly, it's best to get out as many as is possible. So let's just go through, and I'll hand over to Michael, who'll take us through the investment strategy of the fund and how to complete it.
Thank you, Grant. Welcome, everyone. So as Grant was saying, so I've just gone into our site. I've used the search engine to pull up the investment strategy. We go in and, as you can see, it's $49, including GST. Scroll down, there's the information about the product. We've got general information, benefits, and FAQs to run through any information you want to see. You can also go to our support centre and find some more FAQs and QAs there, and also send a query through if you have one. I'll jump in and buy the document. This is where we set up our LightYear Vault. If we don't have a Vault, so I might have it as a client name. I'll use my initials as one because I've already got a Vault. We'll just go next. We'll buy the product. We'll scroll down. I've got credit in my account at the moment. You'd either pay it if you're on the LightYear Docs, one of the memberships that Grant went through before. You may have unlimited documents, and so you'd be able to just, you wouldn't be paying for it. Go through, accept and pay. This is where our LightYear Docs powerful iframe opens up using Hot Docs, and we go through the interview process. I'll just run through this with everyone. So first thing is all the general stuff for the investment strategy. So we put through our name of our fund. I'll use my fund as an example. The date that the actual investment strategy will be established. You can either leave this blank and it can be written in when the investment strategy is actually putting into place, or you can put the dates in if you actually know when it's being executed. So
ideally, from my perspective, I'd like to see it in the first at least 2 or 3 weeks of July. So this is a great opportunity to get back to clients. And as I said before, and tell them that it's actually a requirement to get an investment strategy, investment objective, sit down. It's a great opportunity to get involved and tell them what's required under the Commissioner's guidelines. And more importantly, from that perspective, if they don't want you to do it or it's not part of your program, then effectively make sure that you send out a disclaimer. So then you're disclaiming your liability under the governing rules of the fund and also Section 55. In fact, I'd probably go through and talk about active negligence and also under the SIS Act. So you can see here, Michael's actually put in the current income year. So we're doing a forward-looking, not a backward-looking document.
And that's extremely important, that what Grant's pointed out there, that it is a forward-looking document. So as we go through, we put in the trustee. I'll put in a company here, but you could have an individual trustees as well. My super fund has a corporate trustee. ACN, I don't know that off the top of my head. I'll just use that. One Linda's Lane. We then set up the directors, either sole director or 2 or more directors. This, I'll put up just one. I'll put myself. The date the trustee meeting will be held to actually ratify the investment strategy. So we had that we'll set it at the 10th of July. I'll put it that we sat down and made it on the next day, the 11th. We can, rather than me have to re-enter the address, all we do is we scroll down and we can actually use the autofill and select it, and it populates it. chair of the meeting. As I'm the sole director, I'll be the chair. Now, this is where we get into the real meat of the investment strategy. Now, our investment strategy covers off the not only the what I call the four major or the big hitting asset classes, being cash, fixed interest, equities, and property, and then splits those down into sub classes of those being domestic of each version or international. But we also cover off alternatives, being your hedge funds, your gold, crowdsource funding, if you want to invest in that, into LightYear docs or LightYear group coming up. Also borrowing to cover off LRBAs, and also we have a custom asset class that will cover off things such as collectibles and anything that is not included in any of those. Now, as Grant mentioned, it's extremely important, and I do see this on a common occurrence that advisors, planners, and accountants always go through and have these benchmark allocations of 0 to 100%. It's extremely important that you put due consideration into it, or the members put due consideration into it, and actually refer to either last year's financials or what is appropriate based on the actual members and factors such as the investment timeline, the age, their risk, and meeting the sole purpose test. So,
importantly, as I said, you can't put 0 to 100%. Commissioners ruled on that before. That is not an investment strategy, which leaves the trustee and also the advisors, administrators, and auditors wide open for example, if there was a crash of, like a GFC, or even if there's a dump in the market by 20%, and those investments are realised, the client or the members can recover, and the trustee can recover from those other parties under the SIS Act. So there's no need to have a negligence action. It's a very easy way to recover. The actual size of the benchmarks, what do you think, Michael? I mean, you've got 0 to 35%, which seems to me to be A-OK. If we have, for example, domestic cash and we're going to run, around about 60%, we might want to give ourselves a bit of leeway around about 40, 45%, up to 75%. As I said before, it's not a financial product. What we're doing is we're not saying these are the underlying investments, but certainly it's required under the SIS Act.
Yeah, and then it all depends, as Grant was saying, that we might be saving cash up to make a deposit to invest in resi property or commercial property, and so our allocation may be higher at certain times in relation to our cash position. You obviously, when you've got things, when you go through and split it into the subclasses of international, you also have to take into consideration any risk in terms of FX or anything, and so how much cash or other investments, whether it's equities or anything that you may hold in that international position.
Now, here's a huge word of warning: bright red marks, flashing lights, sirens, etc. Unfortunately, I haven't got any sound effects, but one of the problems you might be facing when you go down this track, and this is why it's absolutely crucial to be jumping online in July and doing new investment strategies, because if a client has put in a large cash contribution or in specie contribution at year end, that buy in itself may throw out the investment strategy that was there. So we need to go back and redress that, so that if we were running like at a 0, what Michael's got there, like 0 to 20% in terms of cash, then what we need to do is, if it's suddenly dumping a whole lot in, we need to put that up a little bit further. Michael, I would actually go, rather than 0 to 85%, I think we need to have a strategy and say, look, inside your fund, you're going to do so much domestic equities. If you think it's going to be up to 85%, I'd probably go, maybe if not, I'd probably go like 30% and up to 85%. Now, if there's obviously a force majeure, such as a tsunami, or there's something happening over in the markets, we can go back and adjust our investment strategy accordingly. I just don't like, personally, from what I've seen from the Commissioner, I just don't like zeros that much. I prefer to say, look, I've got 10 to 40, or I've got, 30% to 85% gives me a bit of leeway there. As an aside, all of the percentages can actually end up greater than 100%. They could end up with 200%. But obviously what we do is we're giving benchmarks there.
And it shows you're putting actual real consideration into those benchmarks. If you 0% doesn't really consider the position of the fund or the members at that particular time.
Yeah, so if you've got domestic property and you're not going to invest in it, that's a perfect time to actually say 0%. And notice how, Michael's also, we include the percentages in there. So it's not auto directed there, we put the percentages in there.
Now, this is your alternatives. As I was discussing before, you may wish to invest via our crowdfunding coming in up into the LightYear group, or you may have hedge funds, absolute return funds, futures.
I had gold, so
gold. Yep. Generally, I would, you know, my personal opinion would you probably go up to 20-30% maybe here, but depending on where the economy is and obviously the members' requirements, as Grant just pointed out in relation to gold may be an investment that they're putting a heavy allocation into. Borrowing strategy, so this is in relation to if we've got an LRBA or similar. Given we said we're not investing in property, we'll probably put 0% here. This is where we've got a custom asset field. So if there's anything outside of any of our asset classes or sub-asset classes, you may wish to put this. So I'd put, I'm going to put yes, I do. Whilst we could have had collectibles in alternative, I'll say collectibles. I'm going to add the key characteristics of my class, asset class. So collection of items that are likely to increase value, such as
so a good one here would be, for example, syndicated, or last week we looked in our superannuation unrelated investment trust, which was underlying property development. Rather than putting in property, it's best to put in here a custom asset class, because it is quite specific. You're really getting more involved in the business, more hands-on. I'd rather put it in there as a separate field, because again, the whole thing about being an SMSF advisor is to have, any accountant or whatever, is to have more documentation rather than less, which is again one of the reasons why we have that unlimited docs offer for $5.95. So absolutely crucial there. And again, the more we get into these sort of fields, go into it, the less exposure we have for our clients, but the more protection we have for ourselves and any other professional involved, including the trustees as well.
But the allocation, we also add the trustee time frame. So I've said 5 years to 10 years for that syndicated property. Then we go next. We check that our signers have come through there, and we press finish. And this is where the power of our iframe and our document platform works and puts together the document in the background.
Now, a couple of other ones, because this is a legal document per se, and you have to understand that once this is ratified, signed, executed by the trustee, it now becomes part of the governing rules of the fund and effectively is law under section 55(1) of the SIS Act. So you're making laws up as you go along, which one of the things is we have sign off from TGA Legal in relation to all our documents, but we open it up. If you made a mistake on the allocation, you want to go and change it later on, there's a 24-hour window opening to enable you to make that change. However, if you're in our unlimited program, unlimited document program, you can obviously go back and make a change as and when you see fit. So let's go and have a look at the investment strategy. So what we've got here, although we call it a product disclosure statement, it's not a financial product, we've put it in there just in case. It's better for us to obviously give a lot more information than less. So we go through and have a look at all the blurb around investment strategies, creating it, the Commissioner's rulings, asset classes, risk, weighting, etc. So we've got the investment strategy. If you just want to go right down, just keep on scrolling down, I think, Michael.
Yeah, we'll go through that.
Yeah. So there's a quite extensive blurb there. Now we get down into the documents. If you just want to take them through that, Michael.
So this is our actual investment strategy that we've created here. So it goes through, as Grant, when he was talking about when we went through our slides, it's important that we have the investment objective, and it's stated there. We then go through the actual strategy, so the background behind that, the asset allocation and how we've put that together, discussion around risk and how that's mitigated. It also has a paragraph there in relation to borrowing, so which covers off, so obviously our LRBAs and if we use self-funding instalment warrants for shares and other. in relation to mitigation of risk, the balance between risk and returns and the trade-off of that, and then goes through, as I discussed before, those actual major asset classes. And this is where, through the interview process, it picks up our allocations that we've made to each of those. So that actually, this table goes through each of those asset classes, gives you the key characteristics of them, the trustee's time frame in relation to that investment, and then the allocations that we put through on the interview process. So you can see here, we've got obviously domestic cash. I've got 0 to 35%. We probably would have had that at maybe 5 to 35%. But we made those changes as we're going through. We've got our fixed interest class, our equities, and as I mentioned earlier, all split into either domestic and international. The big difference in terms of characteristics, it adds a point in relation to there may be risk exposure in terms of whether it's hedged or not hedged over the FX. Got our alternatives, our borrowing, and there is our custom asset class that we had in relation to syndicated property. Then goes through, which is a requirement of the investment strategy to discuss insurances and what the trustee has in place and whether they've and what they've considered in relation to that, the investment strategy review process and monitoring of such, and then we get to our actual sign-off of that investment strategy. So you can see that I've put it in those first couple of weeks of July, the date I've put, the name of the fund, what income year it relates to, details of the trustee and the director of that trustee, where the meeting was held, who chaired it, and we then go through and actually ratify the adoption of that investment strategy and how it meets the SIS Act and the certain resolutions we make in relation to that and adopting that investment strategy. We then have the sign-off section.
As I said, once that is signed off, that now becomes law effectively under the SIS Act, and it's absolutely crucial. We've spent probably a good 100 hours or so building this investment strategy, and certainly from my experience, having done this in the past, having looked at thousands of these, this is clearly one of the best it is the best investment strategy that I have seen to date. So if you'd like to do that, jump on the LightYear Docs portal. Ideally, it should be done in early July. Now, if we were doing this investment strategy now for 2018 and 2019, then you're in big strife, because this is not an investment strategy. It wouldn't be an investment strategy. It's a historical record. Again, go through the if you want to have a look further, go through the Commissioner's guidelines on that, and then start to look at this. This really certainly hits the button and is the absolute pinnacle of compliance around the SIS Act. The auditors out there, if you haven't got those, then please, please make sure that when you go through your current investment strategies that clients are putting up, just be wary, you are on the line under Section 55(3) if there's any underlying problems or losses on investments. Let's make a quick strategy switch and go from investment strategy. Another one that we need to do is at the start of the year is our pension documentation. So if you just want to pull up the slides for us, I'll just cover that really quickly, what the Commissioner's ruling is in relation to the commencement and also the cessation of pensions, and then we'll jump straight into the pension payments quickly, because I'd like to get you guys out and get stuck into work, start building investment strategies. So if we have a look here, just flip that up to a slide. So the very famous ruling, it was in fact, I think it's 2010, a draft ruling /3, ended up being the pension ruling, and it's the epitome, the ultimate guide to pensions. When I came around to doing the Guru's Guide of Self-Managed Super Funds, and I sort of sat down and thought, well, what can I do? Can I really go out much further? But honestly, this ruling itself, if you've never read the ruling, it's absolutely crucial, particularly when it comes down to estate planning, which will be bringing out a whole lot of estate planning documents come September of this year, including wills, binding death benefit directions, testamentary trusts, and a whole range of other stuff. But in here, this is a straight excerpt out of 2013/5. How can you tell a pension or income stream has commenced? When the commencement day occurs must be determined by reference to the terms and conditions of the superannuation income stream agreed by the trustee and the member The rules of the superannuation income stream are set out in the governing rules of the fund and obviously the relevant regulations of CISR 1994, which is 1.069. How can you tell when it ceased? The superannuation income stream ceases for income tax purposes if any of the requirements of the CISR relating to the payment of the superannuation income stream are not met in the financial year. So that's, for example, if we don't make a minimum or we try to add capital to it, so on and so forth. So if we just jump out here, go back to our LightYear Docs platform, if you could show me the whole income stream suite we've got there. We've now virtually, it is now complete. And if we just have a look, thanks, Ash, if you jump into LightYear Docs. And up we pop with the LightYear Docs, and these are all our income streams. So again, how do we know when it's commenced? We've got, you can see up there on the right-hand side, we've got an account-based pension. So we can commence an account-based pension. If you haven't seen us do an account-based pension, we're sort of running out of time here, but we've got an ability to put reversionaries with a whole lot of conditions which you can modify inside that documentation. There's been a whole lot of rubbish around whether you should have a BDBN or auto reversionary pension. Effectively, if you go and have a look at the Commissioner's rulings, all these national tax liaison groups, auto reversionary pension will always override a BDBN. So effectively, what we want to do is make sure we've got auto reversionaries there. If we don't have an auto reversionary, then on death, then that is a cessation event. That pension ceases on the death of the member and rolls back to the accumulation side where a BDBN carries on. So if you want a BDBN to take over from your reversionary pension, then effectively go down that process. And if you're running separate investment strategies, different tax-free, taxable components, it's an absolute disaster. So we want to make sure we have a reversionary. You see our 3 reversionary options there cover what happens if this reversionary person is not open, what happens if this person's not alive, it's this person. So it's some really sophisticated stuff there. Again, top pricing of $99. TRIS exactly the same. We've got an ability there to do a short-term TRIS if we want to, that goes for a year. And essentially the main thing, if you go and have a look at all the laws, and I've been doing income or pensions law since 1988, from that perspective, we need to show that there's an income, because the key issue about that is when a payment is made out of a fund, is it income or is it a lump sum? Obviously, with a transitional retirement income stream, it's always going to be considered as an income stream because we can't pay out a commutation or a lump sum. But essentially, for an account-based pension, we need to work out, is there an income or is it a lump sum? Because they both have different tax consequences. And it's important, and not only tax, but T-bar as well. You can see also there we've got a TRIS foldback. So the idea there is we might set up a TRIS during the year. And again, you'll find all of these we've done previous training on this, all sits in our support centre. We go through the legal, we have a look at why you'd use it, and more importantly, we have a look at the documentation, how to do the documentation. But effectively, if we've done a TRIS and we've taken out our 10%, then effectively, why keep the TRIS open? Because what it does is actually mixes up the accounts, because a TRIS is now on the accumulation side. It's not counted on the pension side from the pension T-bar. So it sets up like a mushroom. And then what we do is once we take our 10%, we want to collapse it. So that's where we use the TRIS foldback documents. Alternatively, with our account-based pension, we might decide to roll back some of that pension back to the accumulation account. So we can use a rollback, or importantly, we can use our pension commutation where we do not want to have an income stream, we want to take a commutation. The importance is that when we take an income stream from an account-based pension or an income payment, that effectively is to be treated as an income and has no impact on the T-bar. We take a commutation, that has an impact on the T-bar. So let's go in and we'll start and have a look at the TRIS just really quickly. So the TRIS pension payment. And I'll take you through here, and I'll take you just through a few things. It's $49 is buying the document. Go and have a look all about the product, etc. if you want to look at this. But again, Ash is just putting it into the folder. She's setting it up. So we're going to do it out of the Smith family SMSF. You can see there, Ash has got like millions. What's she got? Almost $100,000 in credit, which we're happy to give to you. If you're on an unlimited option, happy to give you $100,000 for the year while you've got it effectively. And again, if you don't want to, a couple of things, the $7.95 per month. You can actually pay that up front if you want and do a deal with us. Just simply contact us. If you pay up front, we give some super generous deal-like options there. So let's go through the full, the Smith Family Superannuation Fund. So it's just pretty quick at typing, much better than Michael. Now, what we do is, what day will the member make the application? So what we're doing is, it's a two-step process, and this is embedded in the Commissioner's guideline, the tax ruling, is the member needs to apply and then the trustee needs to ratify. Once the application comes in, the trustee ratifies, again, it becomes part of the governing rules of the fund, and effectively the trustee is bound by it. So what we've got is the age of the member, we've got the account balance, that throws up because, again, it's the start of the income year. So what we're doing is looking at our forward-looking for the year, what pension payments we're going to make. We've put in there that our proposed current year TRIS payment amount is $6,500. And of course, we can always adjust that at a later stage, but this is what our proposed is. We've got our tax-free and also our taxable. We then go down to the next page. We just put in our trustee details, which are fairly important. And then essentially that is our pension payment. Now, what we need, what the purpose of doing this at this point in time of the year is to actually say that we are taking income streams from the TRIS this year. That is not collapsed, so it's no cessation. The problem is we might get down to the end of the year. If there's no documentation around this, then effectively the Commissioner may see that it might call that there's no income stream. If there's no income stream, then amounts taken out of that effectively aren't under a TRIS. And of course, if it's not under a TRIS, it means that the member has taken money out of the fund illegally. So we've got the TRIS meeting. We put it in there. Again, the start of the year is great. I'd be going through all my clients' pensions and doing this at the start of the year. Again, so investment strategies and also income streams as well, plus employment agreements. But I'll look at that next year. If you remember, sign up for our 7 best strategies or 7 top strategies to have your SMSF best year ever is next Tuesday. So this is our TRIS, our current year pension payment. Now for this one, because the TRIS is already up and running, it's not a product disclosure statement, so we haven't done anything further. So let's just go through. I'll put in a couple of little quirky things here for you. I just want to take it through for you. So the first one is the application by John Smith. So this is pretty stock standard, 2019-2020 income year. If we then go down the track, we've got our TRIS. You can see there's 100,000 is account balance. We've got our minimum for the year is 4,000, and then we've got our maximum 10,000. The members proposed 6.5, and then we've got our tax-free taxable components. We go down and the member signs, and because it's an individual, and we want to have this some validity of law, we make sure there's witnesses. So again, this is one of the processes. You print it off, get the client to sign, so on and so forth. Now we get to a binding trustee resolution. Now notice here we call it binding. So it's actually an enforceable contract as between the member and also the trustee of the fund. Now it's not only enforceable at law, but it's also enforceable under the SIS Act. And again, if the trustee fails to meet these conditions built under this resolution, then effectively the member can have action under section 55(1), or more importantly, be careful, the accountant or the administrator can. Again, can you imagine how many TRISs and account-based pensions don't have these pension payments in here, but if there is something wrong with them, there can be action against the auditors, etc. So we go down, we've got all the same sort of data there. We've got the attending, but have a look here. The trustee resolutions, it was resolved by the trustee to make relevant income payments under members' TRIS on the following conditions. Now, this is the one. If the member does not withdraw from their transitional retirement income stream the minimum amount during the income year, the trustee is deemed to have issued a promissory note of the difference between the actual income payments and the minimum income payment as at the last day of the financial year. The promissory note is for no interest and a maximum term of 3 months. So this is a bit quirky. It's very unique. It's very LightYear docs, where we have quite a lot of like these little unique features that are built into our documentation. What it's saying is that if we are short, then there's also a promissory note which is built into this documentation. It's law, it's legal, it's section 55(1). So again, we've put that in there. I'd like to see if there was shortage in cash that we would do a real promissory note, but it doesn't matter, it's built in here. So that's our transition retirement income stream. You can see there it's a company. All companies are signed off by under section 127, and we've got our directors signing off there. Doesn't need to be witnessed because it's actually in accordance with Section 127 of the Corporations Act. So let's now just jump into our account-based pension, because that has a little bit of a different flavour to it. Because account-based pension, remember, we can have commutation payments versus minimum pension payments. My thesis is you will always just take the minimum from a pension and take effectively a commutation for everything extra, because essentially what that does is that will have a debit to our T-bar. So again, we're using the same folder, $49 a current year pension payment. We'll then go down the track. Ash will then use her credit. You can see here the iframe we're using, which is hot docs, is exactly the same. There's no difference between what you're looking at here and the same one that Gaydens will be looking at, the same one as, for example, Minter Ellison will be using, all the major law firms around the world. This is how they build their precedents. You don't think that they actually go and draft everything up front. They actually use hot docs. Hot docs is I suppose, the strongest and most stable document management and document production platform in the world. At this present point in time, the hour that we have been talking on this, there would have been at least 1 million documents produced under Hot Docs platform in that hour. In fact, we've made an estimate it can be up to 10 million an hour when we've had a chat with the Hot Docs representatives. Anyway, Ash has gone through. She's done the same thing with the account-based pension. We go in exactly the same process there. What's the trustee's name? So on and so forth. Street line address, sole director, blah, blah, blah. And then you'll see we'll get to exactly the same. It'd be exactly the same as the TRIS, much the same sort of documents. It's don't need a product disclosure statement because it's under an existing financial product, being an account-based pension. And then when we go through, and she just selected it, so you can see how quickly the system works. Here, this is our precedent. We go down to the binding resolution, just a couple of ones that we want to put here, there. So again, number one, if the member does not withdraw from their account-based pension the minimum amount during income year, the trustee is deemed to have issued a promissory note of the difference. Number two is important. If the member, now again, we've put this in here, if the member withdraws any amount in excess of the member's minimum pension payments during the income year, the trustee is to ask the member whether the payment is a commutation payment which debits the member's pension transfer balance account. So where we do go above the minimum pension amount there, and obviously you guys will be monitoring that process, it's incumbent upon you, alternatively, if you ask the client at the start of the year, or the trustee asks the client at the start of the year, effectively, is any amount paid over the minimum pension amount of commutation, then you are to treat everything as a commutation payment. Again, effectively what we've done is we've injected commutation in here as we've done the promissory note. Again, once it's signed, then it becomes legal, and effectively from that process, it's governed under the superannuation laws. Please feel free to contact Daniel at lightyeardocs.com.au. He'll take you through all of our relevant docs. As a final point, next we'll be sending this video out to you very shortly, along with if you'd like to go and register for our session next week. So that's my top 7 SMSF strategies to make sure you have your best SMSF year ever. So again, thank you very much for attending today. Hope you got a lot out of it. Please feel free to get on and chat to us, make a deal with us around any of our pricing options, and more importantly, make sure you get out there and work on those clients' investment strategies, the client's pension documents, and if you're looking at doing some concessional contributions for the year under an employment agreement, look for that as well. Anyway, it's Grant Abbott signing off. Thank you all for attending today.